What's going on, everybody? I wanted to put this video out yesterday, but of course my internet was down. But I've got my 2 green bars now, and according to AT&T, my internet's good, so let's give this a shot. Now, in this video, I'm gonna talk about Chargepoint's earnings. And in my next video, I'm gonna be cutting up and cleaning up their earnings call. I'll leave you a link down below in the description. Once it's all done, I still have to get around to cutting it up. Hopefully by the end of today, I'll have a cut up edited earnings call just to make it a little bit more easy to digest. But let's get into this video. Let's look at Chargepoint's earnings. We're also gonna check out the chart, and I'm gonna give you my overall thoughts. Don't forget to like, subscribe, hit the notification bell if you like these videos. Lord willing, my internet continues to work and I can get back to daily uploads. But let's take a look at Chargepoint. Now, I'm looking through it on Yahoo Finance, and I'll leave a link down below for you. This is what I prefer to go over when looking at earnings. And what do we have here? Well, we have a 93% year-over-year revenue growth of $125 million reported this quarter. Gross margin improved 1 percentage point quarter-over-quarter. In their fourth quarter, they're expecting 160 to 170 million. Now, they did revise their full-year revenue guidance to about 475 to 485 million dollars, and they did decrease their full-year non-GAAP operating expenses, leaving it now at 325 to 335 million. And as said by the CEO, Chargepoint delivered another quarter of growth exceeding 90% year over year as we continue to scale the business to meet strong demand for our solutions across North America and Europe. Our network's asset-light business model continues to enable our growth as we strive to deliver improved margins and operating leverage. And looking at their actual revenue numbers, their charging system revenue was 96 million, whereas their subscription revenue, this is reoccurring, that was 21 million, 21.7 specifically, which is up 62% from 13.4 million in the prior year's same quarter. So this is going to be continuing to add to their revenue year over year over year. This subscription revenue, this is going to be recurring, and that's a great thing to see grow. Now, as for their gross margin, this was actually down. This, they say, is due to supply chain problems, which affects both the cost and availability of products. And their third quarter net loss was 84.5 million compared to almost 70 million in the prior year's same quarter, so 1 year ago. But looking at the cash on their balance sheet, they do have nearly 400 million, specifically 397.6 million dollars on their balance sheet. And going back to their guidance, they did expect, like I said, 160 to 170 million. At the midpoint, this represents an anticipated increase of 108% compared to the prior year's same quarter. They also expect a sequential gross margin improvement from the third quarter's 20%, which would result in an annual gross margin which is below their previous guidance. And like I said, guys, I will get you that earnings call cleaned up. It just might take a little while. Now, I'm personally very happy with their earnings. We're seeing that continued revenue growth, and of that revenue growth, one thing that's important is we're seeing recurring subscription revenue growth as well. And that's going to be money basically guaranteed to keep coming in. Now, one thing you'll notice from today and yesterday is Wall Street really didn't take this earnings that well. And it's the recurring theme of a company not profitable while increasing revenue and seeing amazing revenue growth quarter over quarter over quarter over quarter. That's still not enough for Wall Street to actually want to touch this company. In this current environment, no one wants to take any risk, and Chargepoint is still a risky company. But we're going to look at the chart. I'm going to give you my thoughts there. And while yes, I do believe it's still risky, I believe in this long term. And while yes, short term, this could definitely come back to its May 11 lows, so be it. I don't personally think it matters much if you're buying this at 11, if you're buying this at 9. I do believe in the long term, it's going to play out very great. And back in a risk-on market, this is going to easily go to 20 and beyond. But we aren't there yet. The Fed's still raising rates, inflation is still high. And for those reasons, among many others, Chargepoint not being profitable, for example, Wall Street doesn't want anything to do with companies like Chargepoint. However, in the next risk-on market, this will change. But let's take a quick look at the chart. And as I've said, this has been on a wild ride. It hasn't yet hit its May 11 low. This has been months since then. And actually, since it hit its low, it went on to double up. More than double up, and then came back down. Now we're sitting at 1150. Now an important level for you to watch is going to be right around 1110. If we do break from this, it's very likely we fall further. And one thing you'll see is this May 11 low, this ascending trend we had was a failed trend. We did finally fail this trend, found resistance on it, and we were kind of continuing down. Just looking at this chart, I would say that we're still on a continued downward trajectory. It kind of depends on what the overall market wants to do, of course. But I got mixed feelings on this chart. I believe short term looks a little bit bearish. However, it's still very encouraging that we're still pretty far away from our May 11 lows, and it has now been just about 6 months or more. So while yes, the macro economy doesn't look that great, the Fed is still expected to raise rates, even though at a lower pace, but they're still raising rates. That's the key word. Inflation is still high. The Fed still wants the housing market to drop. The Fed still wants higher unemployment. Once we get through the next couple of months, get through whatever pain is ahead for us in the stock market, maybe a few months, maybe even up to a year. After this point, I do believe Chargepoint will turn back around and will be this hot stock that everybody's talking about again. But thanks for watching, guys. I appreciate you. Hopefully you got something useful out of this video. Take it easy, and I'll see you on the next one.